Alphabet, the digital behemoth, it feels like they're executing this really aggressive AI offense while at the same time trying to defend their trillion-dollar search castle.
Yeah, it's a tricky balance.
So the question is it time to maybe buy the dip after yesterday's sell-off? Or is that core business, actually vulnerable? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. We're doing a deep dive today into Alphabet, that's ticker GOOGL. We're analyzing data captured this morning, October 22nd, 2025.
And just quickly, before we dive into Alphabet itself, let's get a feel for the market. The mood out there, based on our research, well, it's cautious.
Cautious, yeah.
Futures are pointing a bit lower, and you definitely feel that chill, especially in tech.
Okay.
And the main thing holding things back today seems to be those scheduled Federal Reserve speeches later this afternoon.
Right, everyone's waiting on the Fed.
Pretty much. Waiting to see if the tone shifts.
That caution definitely seems reflected in Alphabet's own price action lately. So let's unpack this fundamental tug-of-war. Our research really points to this being, almost the definition of a two-front war in the AI race.
Yeah, absolutely. And what's really fascinating potentially is this monumental win for their cloud division, the offense here.
Okay.
It's driven by these reported advanced talks for a huge multi-billion-dollar cloud deal with Anthropic.
Yeah.
The AI darling.
Anthropic, right. That would be big.
It would be huge if Google Cloud lands this. Anthropic is a real credible competitor to OpenAI.
Okay.
So getting them helps Google differentiate its cloud from, say, Microsoft's Azure, immediately.
Okay, so that's the brilliant offensive move they're trying to make. But then there's the defense, right? How exposed is that core search business?
Well, that's the rub.
Because yesterday, OpenAI launched its own AI-powered web browser. That's a direct challenge to Chrome, isn't it?
It is a direct challenge to Chrome and search dominance. And yeah, the stock tumbled hard on that news. And this whole conflict, this offense versus defense, it leads to these, honestly, hilariously confused valuation models.
Confused how?
Well, this is where it gets really insightful for you listening. One model we looked at, using free cash flow, it puts fair value down at $110.
Wow, $110, okay.
But then another model, based on earnings per share, suggests $515.
Whoa, wait, $110 versus $515. How is that even possible? That's a massive split.
It is what's driving it. It's basically the cost of this AI war. That $110 number reflects Alphabet spending billions right now on AI infrastructure.
Right.
That crushes free cash flow because of the huge capex.
Okay, so high risk, high investment.
Exactly. But then the $515 number reflects the massive, current profitability of the core search business, which is still a cash machine.
So the market, it's trading around $250. It's basically just split the difference.
Seems like it. The market's just sitting right in the middle of those two extremes. But, despite all this noise, Wall Street, they seem pretty convinced.
Oh, yeah.
Yeah, 83% of analysts rate the stock a buy or strong buy. And get this, 0 analysts recommend selling it. None.
Okay, so Wall Street's still bullish long-term, despite the confusion. Interesting. So we've got the company fighting these two strategic wars. The valuation is all over the place. That leads us nicely into market sentiment. And it sounds like that reflects the split too, right? Short-term fear, but maybe longer-term confidence.
That's exactly what our research suggests. You look at the options market, the put-to-call ratio is 1.08.
Slightly bearish then.
Slightly bearish, yeah. More people betting on a short-term dip than a rise. It reflects that nervousness we talked about. But you connect this to the bigger picture. The bears aren't making a huge long-term bet against Alphabet. Short interest is really low, 1.02% of the float. Negligible.
Got it. So traders are maybe cautious for the next few days, but the long-term money isn't running for the exits.
Precisely.
Okay, let's look at the technicals then. What's the chart telling us?
Well, the long-term trend is still undeniably bullish. You zoom out, it's up, but
it's being challenged now.
It's definitely being challenged by all this recent volatility.
Yeah.
And short-term, those momentum indicators, they're flattening out. Some even turning negative.
Showing exhaustion.
Yeah, exhaustion after the last big push higher.
Yeah.
And volatility itself is ticking up. It all suggests, bigger price swings are probably coming as the market tries to figure this all out.
Okay, makes sense. So weighing all the fundamentals pulling in different directions, the nervous sentiment, the tired technicals, what's the verdict from our research?
It leads us to a neutral stance.
Yeah.
It really is the definition of a strategic stalemate right now.
A stalemate, okay.
And the main risks, the things that could tip the scales one way or the other, they're pretty straightforward, I think.
Where are they?
One, that OpenAI browser actually starts eating into search market share significantly. That's the big defensive risk.
Right.
2, just broader market weakness. If the whole tech sector pulls back, it'll drag Alphabet down too. And 3, if that really important Anthropic deal, the offensive move, if that fails to materialize, that would be a blow.
Okay, so those are the key risks. What about key levels for you watching the stock day to day? What's the battleground?
Right, the short-term levels to watch.
Yeah.
The ceiling, you could say, is around $255. The bulls really need to get back above that and hold it.
$255, okay. And the floor?
The floor seems to be around $247.50.
Got it.
But the really critical level, the invalidation point for any near-term bullish idea, is probably yesterday's low. That's $244.15.
$244.15, so a break below that would be quite negative.
Yeah, a break below that suggests that maybe that defensive threat, the OpenAI browser, is being taken much more seriously than the potential Anthropic win.
Okay, so summing it up, it feels like Alphabet is playing this really high-stakes chess match. They're making a potentially brilliant move on the cloud board with Anthropic, but their king, their core search business, just got put in check by this rival AI browser.
Yeah, that's a good way to put it.
So I guess it's time to just watch the board very closely and see who makes the next move. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice.
Always do your own research or consult with qualified financial advisors before making any investments.
Thanks for tuning in. Catch you in the next episode.